What's up, world? How you doing? Did you D&D?
So the YouTube, no I didn't. So the YouTube, we are live on the YouTube, teaching people how to buy a house today. How to buy a house today. So we're going to pull up the interest rates here. And we got some good stories today. Got some good ones.
Good ones.
Good stories.
Good stories. How you guys doing? Happy Monday.
Happy Monday.
What is
Watch
today's
there.
date? 22nd?
Watch there because this one's...
Taking a look. All right, guys. So all 4 million of you, I want you to let me know where you're at. Ask us your real estate questions. Ask us your lending questions. Ask us how the market is. Ask us about aliens, JFK, whatever's on your mind.
Which one do I know about? Aliens or JFK?
I think JFK was an alien.
What?
Yep.
Oh, that's a whole... You heard it here first.
You heard it here first.
Nobody heard it first.
He didn't
but
get
you.
shot.
No?
He teleported to a different dimension.
Think so?
I think so.
Okay.
Well, I think when you dream, it's a different dimension.
Okay.
And in these other dimensions,
I don't know how I feel about all that, but okay.
I'm a badass in these other dimensions.
Okay.
I'm fighting bears.
So we're going to talk about some of the good things that have happened. Like this one. What's up, KK? KK sent us a flower. Good to see you, KK. We always love to see you. So, we are live on Facebook, Instagram, TikTok, and YouTube. Shit.
So you said there's some great things we were talking about. You lost train of thought or what?
Yeah, I did. But we're going to talk about two things, and I want your input on both of them. One of them is, my son texted me this morning and says, hey, I've been thinking about refinancing. Is it a good idea to refinance? And I thought about that, and I'm like, you know what? That's not such a straightforward answer. Because there's things that people don't want you to know about. Because they make money as a lender. And I want to put this out there, and I'm going to tell the story. And then the second thing is, I woke up to my text messages, and somebody that watched us on a live probably 2 weeks ago, maybe? 2 weeks ago, had questions about a builder. I won't name any names, but just had questions about a builder. And they said, hey, this doesn't quite feel right. And we said, hey, give us a call. Let's figure it out. And we looked at the paperwork, we looked at the overall profile, and we said, I don't know about this. And I said, I want you to ask these questions. And then she said, yeah, I don't know about this either. And then we said, okay, what's your max downside? And it was, I don't know, between $2,000 and $5,000 or something like that. And I said, are you okay with losing that? We're talking about big price homes, not small price homes. And she said, yeah, I don't know. So I'm so upset about losing that. I'd rather not have a bad deal. And I said, let me explain a few things that go on with this new build. And talked about how the landscaping, the property tax base, a few other things. And then says, well, I think I'm not going to do this one. I have another one that I'm interested in. Found out this morning we're in escrow with this person, and we saved them from a bad deal. I believe it was a bad deal for them. I believe they weren't even qualified. Do you agree with the
Yep.
assessment? I believe they weren't even qualified the way they were put in qualified. But this is the games that builders play with people. And builders play the people, loan officers play it with people, realtors play it with people. I try not to play it. I'll be honest with everybody. I did see a broker come on, and a loan officer, broker, there's a different way to do it. But she came out and said, hey, this is how we do it. And this is how we make our money. And I was like, yeah, but you're not telling the whole story. Because the whole story of a broker is you get to choose every quarter how much commission you make from this line you're going down. And then once they get the client, they get to choose which line they're going to send them down based off of the commission. So that's how a broker makes their choices. And they make it as if, hey, we can do it cheaper. And that's true in some instances, but it's at 100% the broker's choice. If the broker decides, hey, I can make a lot of money off this guy, they can send it down that path and make a lot of money. So the difference with a direct lender is we don't get a choice. We don't. We set it and that's it. We got to set it and that's it. We can't change it. So there's some things that I want to cover about that. Like, for instance, the builder part, the broker part, and the refinance. That's a lot, dude. I just spoke a whole bunch. You talk.
So,
some
yeah,
questions.
there's some stuff that I want to talk about builder too. I want to touch on it. I kind of want to share with them. It's been on my mind as well. But let's answer a couple of these.
Okay, cool. We got questions on Facebook. Thank you for those. Instagram. Thank you, Instagram. TikTok. We appreciate you on TikTok. And YouTube. We're going to work really hard to answer all your questions, get you a house in 2024. Go ahead.
Alado Salinas Celine, what's your take on submitting a pre-approval with no down payment saved? You want to take that? Want me to take it?
You take it.
Okay. So I'll do a pre-qual, but you're going to have to get the money. Okay. So the pre-qual means that this is where you stand, but I'm not going to release an approval until I know you can buy. And if you can buy, means you have the down payment, you have the assets, the credit, the income, whatever it may be. Now, that being said, if you're qualified for a program and you don't have a down payment, then all we have to save is a deposit and we can move forward. So I will do it all day long because I want everyone to know where they stand. If you want to buy a house, I don't want to hold you back. I want to let you know where you stand. And if it's only saving 10 grand, then it's only saving 10 grand. Maybe we can get that on your tax refund. There's a thought. So yeah, I would do it.
Not to mention, there's a situation that happens when we send somebody to go shopping. We told the world they're qualified, and if they don't have the money, that's going to get caught because a good realtor, a good listing agent is going to say, "Hey, listen, all right, cool, we're going to take your offer. I need proof of funds." Proof of funds. You say you're getting a gift from your mom. Can I see the bank account where your mom's going to give it to you from? If it's 20 grand, let me see the bank account where your mom has it. And your good listing agent is gonna demand that. They'll call us or they'll talk to the other realtor and they'll say, "Hey, we need proof of funds." Because trust me, bro, it's coming. Does not happen. It doesn't happen. And I tell that to people all the time because they're like, "Hey, I'm gonna be getting it from my tax return. I'm gonna get it from my uncle. Hey, I got a big job that's paying me off. I got all these things that are gonna happen in the future. Can I just start shopping?" And I say, "No. No, I can qualify you on gift from a relative. I will qualify you. If you tell me mom's going to give me 20 grand, I have no problem putting down mom's going to give me 20 grand. Then I'll tell the client, I need you to know they are going to demand proof of funds. They're going to, because this is a professional business. It's not a trust me bro business. It's a professional business. And even with all that, there's still all kinds of things that can go wrong. Go ahead.
Okay, so Alado Salinas, back to you. Once submitting a pre-approval, how long do I have to come up with the money? So here's the thing. I will let you know where you stand, but you're not going to be pre-approved until you have the money. You're not going to start shopping until you have the money. So all we're going to do is let you know where you stand, and that'll be good forever until you have the money. All we got to do is stay in contact. That's all. And then up top, we got some questions up here.
And the reason, real quick, don't lose those questions, but the reason is it's unfair to the person selling their house if you can't really get involved and it's just, trust me, bro, I'll get it. It doesn't work like that. I actually need, mom has it, cool, just prove it. Everything is just proof. Everything is proof. You got income, prove it. Cool.
Xavier, I have a 620 score, $53,000 yearly income. Only income. Family of 6 in Kansas. Could I qualify? I'm a first-time home buyer.
I'd say if you have no debt, you're probably going to start at $250,000 and go up from there.
Yep.
$250,000.
Burrito, what area are you in? I want a new home.
He's in that area right there. I'm in this area right here. I'm going to move over to this area. I'm now in this area.
Get out of my area.
Okay, I'm out of his area now. Cool. We're in Riverside, California, but we do loans in 49 out of the 50 states. The only state we don't do business in is New York. Thank you for the hearts. Thank you for balloons. Appreciate you guys. Heart it up. Let the algorithm know that we're trying to get you a house in 2024. We're going to talk about today, should you refinance? I got a question from my son. Should you refinance? Should I refinance? Should I refinance? I don't know. I told him we're going to work out the numbers and I'm going to give you the real picture. And I'm also going to give the people on live the real picture. Also, somebody got a hold of us a couple weeks ago and said, "Hey, I'm not sure that this is a good deal with this builder, but I'm locked in." And I said, "No, you're not locked in. You might lose your EMD, that's earnest money deposit, but you're not locked in." And I can tell you the pros and cons of going through a transaction that you don't want to be in.
So here, in that situation, I believe that the deposit's going to be okay because the builder lender didn't do their due diligence. The builder lender said they qualify. No, they don't. We got to go a different route. So in that situation, they didn't do their due diligence. If the lender works for the builder, you get your deposit back. My opinion.
Appreciate the hearts. Appreciate the balloons. Thank you, guys. Let the algorithm know we're trying to get you a house in 2024. We want to help you.
Anita and Larry, is there any way to get my ex off my mortgage loan besides paying an attorney $6,000?
Well, even if you pay the attorney, it's a little weird situation because the attorney can say whatever they want, but the lender went into the contract. It's a contract. And Article 1, Section 2 of the Constitution says you have the ability to contract. Ooh, I got technical there. So you have the ability to contract. You're in a contract. An attorney can't just go, hey, ignore the contract.
Pay me $6,000.
Yeah, even a judge can't say, hey, ignore the contract. It doesn't work like that. What has to happen is the lender has to go, we're willing to allow you to assume the loan provided you can show the evidence that you can pay this loan on your own. So that's a way. Another way is to refinance it. You can refinance it without your wife. But it's not very simple, and it's not just pay an attorney.
Yep. Okay.
Oh,
so
okay.
Efrain. Oh man, this thing.
Damn, this thing's moving. Thank you guys. We appreciate you on Facebook, Instagram, TikTok, and YouTube. We're going to answer your questions. We're going to put out some scenarios. It's good. Cool.
You're welcome, Eladio of Vero. Hello, do you guys do I-10 loans, and is it 15% down?
Vero, yes, we do I-10 loans. And 15% if everything is good. That's the best case scenario for an I-10 loan. Usually 20%, but we do have one program that goes 15%. So get a hold of us. We'll move forward with that. Hey, the next question usually is, what if I have somebody that's not I-10 and they want to go regular FHA, but I am I-10? Can't do that. If it's an I-10 loan, the whole thing's I-10. If it's FHA, no I-10s on it. So those are two different categories entirely.
Good. Who checks the funds, realtor or lender?
Well, the realtor, yes, because the listing agent has a fiduciary responsibility to the seller to say, hey, these funds are actually there. They usually call the lender because the lender has the docs and has the private financials, and in order to get into the contract, that's how it happens. So both the listing agent and the lender are usually involved in that part.
Mm-hmm. Efrain, what's the average interest rate currently for I-10 loans? Want me to take that?
Yeah, I'll take it.
Okay, so the rule of thumb is wherever you're at with a traditional rate, it's 1 to 4 points higher. Okay, somewhere in that range, and it's going to depend on your debt to income. It's going to depend on the program. It's going to depend on how much you're putting down. So I'll give you an example. Let's say the current rate regular right now for you would be 6. Okay, so your I-10 loan is going to be 7, 8, 9, somewhere in that range. Okay, so just rule of thumb. Ralph.
Don't forget those.
Ooh, yeah.
Hi, Navy Mom Donna. What's up?
Hey guys. Do you do small loans in Detroit? What's a small loan?
What's a small loan? There's something called HPM, high price mortgage. What happens is there's a certain amount that costs closing costs, and when the closing costs exceed a percentage of the loan, it becomes a HPM, a high price mortgage. That's usually around $80,000, $90,000, depending on a few factors. So usually below that, it doesn't work so well with banks.
Yeah.
Plus, they want to make their money. The banks need to make their money. They need to pay for those big glass buildings, and they don't do it off of $40,000 loans.
Yeah. What do you guys don't you want them to be living a life of luxury?
Dude, they got private jets.
Yeah, exactly. Thank you all for the love, hearts,
Thank
shares.
Thank you. We appreciate you. Let the algorithm know we're trying to help you get a house in 2024, just for you.
Anita and Larry, you're welcome. Eric, thoughts on FHA Streamline? Cons?
Okay, Eric, come close. We're going to talk about Streamline.
Back up because you guys are getting close.
Yeah, Eric, come a little closer. Okay, so the reason you would streamline is because you're going to get a better interest rate. And you're not going to have to go through the full refinance package. However, you probably only want to streamline once. So you do need to think this through. Am I going to be in this house for 3 to 5 more years, or 7 years or longer? Or do I plan on moving next year? Because the Streamline is still not free. It's not free. I don't care what the ads on TV say, it's not free. They use fancy moving of words in order to make it happen. They'll say, hey, listen, no money out of your pocket. Shoot, no money out of your pocket means I'm going to build it into the loan. I'm still getting paid, but you don't have any money out of your pocket, and you're probably going to get screwed harder. So it's not free, but that doesn't mean it's bad. Sometimes it's actually good. But the question is, if you're going to do it and it's your forever home, let's do it once and make sure you're set, because you're going to have an opportunity to buy down the rate. On a Streamline, you can't go too deep on buying down the rate. On a regular refinance, you can. But if you know that rates are going to drop over the next year, Like, for instance, the chairman of Federal Reserve came out and said, we're going to drop the rates 3 times or maybe even 6 times over the next year in 2024. That's 20, right? That's where we're at right now. So that means we anticipate the rates to go down over the next year, and they haven't gone down not even once yet. So if they do go down, you're going to do the streamline. But then 6 months later, you're going to be going, rates are lower. Maybe I should streamline again. Well, what happens, and we're going to get to this in the refinance, is you reset the 30-year clock because you just went back to 30 years again. Everything that and it sounds better because I'm paying $200 less a month. Oh, it's great. Yes, $200 less a month. But if I put 10 years back on it, I might actually not be paying less. I might be paying more. I'm just paying less every month. So it's very complicated, and we want to help you. Cool. Go ahead.
Maddie said, hey, my 2 favorite people on this app.
What's up, Maddie? We're glad to see you.
You're my second favorite Maddie.
Second, his daughter's name Maddie, that's why.
Hey, I'm sorry. You would be my favorite if I didn't have a kiddo.
Yeah,
She's
that's,
my
yeah,
favorite.
yeah.
Okay, Al Cheesecake. All right.
Hold on, I just got to give you props for that name, man. What do you want to call yourself?
Al Cheesecake.
Oh, yeah, that's going to get him.
My favorite, though.
Who doesn't like cheesecake?
You know what my favorite one is?
What is it?
El Wapo King.
El Wapo King.
If you're out there, El Wapo King.
What's up, El Wapo
They're
King?
my favorite.
Dude, can you imagine you're like 13 and setting up this thing? You're like, hey, I'm the badass dude of the world.com. And then you got to live with that forever?
But Al Cheesecake, can I get a house? 21 years of age, $110K a year. What?
At 21?
Good job, man.
Good for you, man.
600 credit, and I have a camper and a truck payment.
I would say, depending on what that camper and truck payment are, yes, you can. I got to build your profile, and you're probably starting at the $500,000 mark. $500,000 mark at 21 years old. At 21. Good job.
In your loan estimate docs, are you supposed to be paying for both points and a buy down? Ask Sharon Carpenter. Isn't Sharon Carpenter a famous musician?
That's Karen Carpenter.
Maybe it's her cousin.
Yeah, could be. Hey, Karen, Sharon, what's up?
Same.
Yeah, same thing.
You're famous to me, Sharon.
Yeah, famous. Sharon, we like you. Go ahead, answer the question, dude. What are you waiting for?
Yeah, what am I waiting for?
Yeah.
So yes, the answer is yes. So points and the buy down are the same thing.
Well, not necessarily if you're going with a builder. I'm sorry, with a broker. If you're with a direct lender, to us, points and buy down are the same thing. That's a direct lender. So he's right at a direct lender. But if you're at a broker, the broker is going to make you pay for the buy down, and then the points are the money they're putting in their pocket. So that's a little bit different when you go broker. Depends on if you're going direct lender or broker. If it is direct lender, same thing. If it's broker, they're putting money in their pocket and making you pay for the buy down.
So let me clarify that.
Okay, clarify.
Okay. So buying points on a loan is attached to your rate. Adding an origination fee is totally different. So that's when I say rates or points and buy down can be one and the same. But Lee brings up a separate situation, which means your origination. So he's correct. On a broker, you're going to pay their commission. You're actually paying them. With us, you're not. It's built in, like you said. Goat House, zero down FHA?
Yes. Well, no. Yes. Is that clear? All right, cool. Yeah. So FHA is 3.5% down. 3.5% down. However, most down payment assistance programs are designed to go on an FHA chassis. So we get you qualified for FHA first, and then we plug you into the local down payment assistance program that helps you, and you land up with zero down. So can you do zero down FHA? Yes.
Hang in there, guys. There's a lot of questions. We will answer your questions.
We're getting
It'll
to
take
it.
us a minute to
yeah,
get
we,
there.
we're here for a little bit longer, and I do want to talk about whether it's a good idea to refinance. And some of the people on this app, we're helping people on the app. It's amazing. We helped somebody recently. We got 2 people with questionable deals at builders. Now, builders are playing dirty birdie with people. Right now, they're playing really dirty birdie, and they have no idea that they're doing it. The client has no idea that the builder's playing dirty birdie. There's no way for them to know. But anybody in the business, anybody, can be us. We hope it's us. But go to your loan officer, go to your realtor, go to your lawyer friend and go, hey, this is what's going on. Does this sound right? And they'll tell you, hey, it either sounds right or it doesn't. Many times we go, that's a great rate. That's a good deal. You're doing great. Many times we do that. When they send us an LE, I'm like, I couldn't beat this. This is great. You did good. But sometimes we're like, this is a little fishy. I don't know about that. Ask for this document. And then they'll say, hey, I asked for the document, but they said they're going to get it to me tomorrow or the next day, and then something's changed. Oh, they said I was qualified, and then now all of a sudden they're saying I'm not. Wait, what? Does that happen?
Mm-hmm. All the time.
So, all the time. So we're helping somebody that was in that situation. We just went into escrow. I found out about this morning. He told me it was Friday.
Anna Zarate, I have a $1,400 credit card. Do you recommend I pay for it before I run my credit to buy a house?
No, Anna, if you're new here, you got to listen to this. You don't know whether it's good to pay your credit card off or not. You don't know. You know who knows? We do. Or a loan officer that knows what they're talking about, because sometimes you'll pay $1,400 towards a credit card that should have been used somewhere else, or we should be using it to buy down a rate, or for down payment, or a myriad of other things. So Anna, the right thing to do, get your credit pulled, let's figure it out, and then we'll give you an exact path if you're trying to buy a house.
Owner of with Box X.
It's like he owns a gate or drums.
Box X.
I'm going to say drums. He owns drums.
Well,
Owner of drums.
A house for 19.5. Can I get a loan for that with no credit? That's at
19.5 million? Yeah, with no credit? Yeah.
The lingo you're using,
you're a baller,
there,
man. 19.5 million. I have never done a $19.5 million property. I would love to, but I've never done it. I'll find out for you. If you're asking about 19,500, probably not. Probably not FHA, Fannie Mae, Freddie Mac, because it's what's called an HPM. Your closing costs alone are going to be, call it $8,000, which is 33% of your loan. That's going to violate all kinds of laws.
Mm-hmm. You're right, Anna Zarate. Lee said it too. You were told not to pay off the debt first. Let us do the due diligence and give you advice from there. User 8281. How much do I have to How much do I have to make to buy a $600,000 house?
Well, if you are making $135,000 or more, call us, because you start in that gauge, right in the range. Is it a good idea to refinance? I don't know. We're going to find out.
I'm getting a 1% builder incentive for an in-house lender.
Oh.
Is it possible for outside lender to beat that? What is that?
Blueberry the Husky. Okay, so 1% builder incentive. So here's what they say. Here's where I say it's dirty birdie. And this has happened to a lot. They like to dangle granite countertops in front of you, or tile floors, or whatever they're or 1%. Here's the thing. They have the money because they're the seller. The seller is not regulated by laws. So let's say I was selling my house and I only wanted to sell to purple people. Can I do that? Yeah, as a seller, yeah, because I'm a private citizen. I get to do whatever I want. But the minute the realtor gets involved, the realtor is governed. The lender is governed. We're all governed. We don't get to say we only do for purple people, but the seller can. So the builder, in the capacity of seller, can do anything they want to. Anything. They can say, hey, listen, for purple people, I will give you an extra $10,000. I can do that. Why? Because I'm the seller. I get to do that. But the minute they get into realtor and lender, they got to follow laws. You can't do that. So what builders say is, hey, listen, if you don't have a realtor, wink, wink, and you use our lender, wink, wink, we'll give you 1%. And in my head, I'm like, oh, that hurt to hear. Why? Because they said, I want you to go to court. Yeah. And in this court, the only one writing a check is going to be you. The only one writing a check. And what I'd like you to do is not bring a lawyer. Yeah, don't worry about it. Oh, no. My lawyer will take care of your stuff. Don't worry about that. Yeah. We'll take care of you. Don't worry about it. We'll take care of you. Builders do this. And if you walk in with that 1% incentive, just saying, hey, I think that's a good idea, you're missing a lot of pieces that you don't know about. And we've had many a client back out of a builder deal because the builder put all this thing in here, and we just say, hey, ask for these few documents. And the minute they ask for it, like, this doesn't seem right anymore. And then they walk away. So 1% can be good, but mostly probably not.
So Sharon Carpenter actually brings up that it's building construction that she was talking about too. So let me give you a little bit of my opinion on this, okay? And this actually goes back to our most recent transaction that he was talking about earlier. So builders put a lot of pressure on the people that are involved in the transaction. The agents, the lenders, they put a lot of pressure on there because builders kind of hold the gold. So lenders want to work for them. Agents want to work for them because they hold the gold. New construction is going to sell all day long, every time, especially when you have phase 1, phase 2, phase 3. There's a lot of money in that for the individuals who are working for the builder. With that kind of pressure, and I know this because I've been a lender for a builder, and I know they want updates, and they want this, and they want that, and they want everything to sound beautiful all the time. So there's so much pressure on a lender, so much pressure that they will qualify borrowers and lose sight of qualifications and send out an approval that's not actually accurate.
Dude, I've seen that. We
to
actually
push these
know
things
some
out
people.
on a regular basis.
We know some people that were pressured so much that they started doctoring the documents. And this is, in our industry, that's very bad. You can get away with it maybe once or twice, but you should never do it. Never, 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 never. That's mortgage fraud, and we have a license for a reason. And if they find out that you did it, they found out on somebody we know, they find out that you did it, the justice wheels are slow but absolute. And when they finally punch your ticket and you can't do loans anymore, it was never worth it. Never. We've had many people go, hey, did we just say that this happened? No, absolutely not. No, I'm the wrong guy. I've literally sat in offices where the realtor looked me in the eyes and said, hey, I just want you to know, your idea of helping us to grow by marketing together is cute, but my lenders pay me in cash for my deals. And I said, nice to know you. You stay with that lender. That's illegal in every respect. Yeah, I'm out of here. Good luck to you. I'm not going to say a word, but I'm never doing business with you. Never, 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 never.
You guys go to jail together.
Yes, I know.
It's called kickbacks, by the way.
Sorry, got a little crazy there.
So I'm gonna keep going on this though.
Dude, keep going.
So when you do get qualified by a builder lender, here's what I'm gonna recommend. Ask them how big their team is.
Yeah.
Not their company.
Ryan says, I do kickback. Yeah, you're going to jail. I'm sorry. Can't say that, Ryan. I hope you have a great life.
Their personal team. How big is your personal team? Because imagine this. You got a brand new grand opening builder, okay? They got 4 phases that they're going to be building. There's 120 houses called, okay? How many people do you think walk in there on the weekend and says, yes, I want to get qualified for Unit 1, Unit 2, Unit 3, Unit 4, Unit 5, however different many phases or units that they have, okay? Maybe 20, 30, 50, 200, and that lender has to get an answer on Monday. Do you think you were properly qualified? Maybe, maybe not. I don't know. But ask them how big their team is, because if they say, I got a dozen people on my team, should be able to handle that. If they say it's just me, you're screwed. Just saying, my opinion, just an opinion.
So we want to know what are the disadvantages of refinance? Okay, so first, this is big. I've been telling everybody since we started the live, we're going to talk about refinance because it sounds better if a loan officer that you don't know that doesn't have your best interest is telling you it's a good idea to refinance. They're like, hey, listen, I can save you $100 a month, and then they'll do the math for you. They'll go $100 a month times 12 months. Well, that's $1,200 a year. Well, that doesn't sound like a lot until you do it times 10 years. Well, that's $12,000. Well, you do that times 3 because there's 30 years in a loan. That's $36,000. So you're saving $36,000. That's the pitch. You know how I know? Because I do it. But then there's the other side. Here's the honest loan officer. The honest loan officer is going to go, but you're saving $36,000 and you're going to have to restart your 30-year clock. So it's not going to start at whatever 23 years where it's at right now. You've just added another 7 years. So even though it's $100 less, do 7 years more of payments, and that $30,000 savings is no longer $30,000 savings. It's actually a $12,000 loss in that scenario. $12,000 loss, but you can't see it because you're seeing the monthly payment. And I forgot to tell you, the refinance is not free, even if it's a VAIRRRL or a FHA Streamline. Those are not free. All those are is they say, hey, listen, I will be able to pay less every month. So let's build the lender fee in, which is probably about $3,000. Let's build that in. So now, not only are you starting that 7-year clock over and paying $40,000 more in payments because you have 7 more years, you also have to add $3,000 to pay the loan officer in the bank. So now, is that a better scenario? Not always, but you have to look at all the pieces. Now, sometimes is it better? Sometimes, yeah, sometimes it is way better. I've been in a situation where I'm like, hey, listen, we're going to save you $300 a month. That's a lot, but let's look at all the pieces. We're starting this 30-year clock again. So that 7 years that you've paid off, it's no longer there anymore. You got to start at 30. Or in English, whatever your payment is, times 12, times 7, because that's 7 years of payments you would not have had if you kept that loan. So it is a financial decision. There's a lot of numbers. It's not just monthly savings, which is where most people look at it. They look at, I save $100 a month. It was great. I didn't even have to pay money out of pocket. That's because the lending business knows how to stack it into the loan so you don't have to make anything out of pocket, but they do land up with their money. So do I do this? Yes, I tell people you'll save $100 a month times 12 months, which is $1,200 times 10 years, $12,000. Over 30 years, that's $36,000, and that's true, but then I'll give you the rest of the story. But let's not forget, you're starting the clock over, and you had 7 years of paid off. So is it a good idea to refinance? Sometimes, but you need to really think about it. And in this interest rate environment, the chairman of the Federal Reserve, who's named what?
Jerome Powell?
Yes. See, I just make sure you're here and participating. So you got a picture of Jerome? Dude, you're badass. You're badass. I do look. Okay. So anyway, Jerome Powell has come out and said, hey, listen, we think we got inflation under control for this cycle, and we do anticipate that we are going to decrease rates between 75 and 175 basis points in the year of 2024. So what does that mean? What that means is we're going to refinance. But let's make sure we get to the lowest end of the curve before we do it. Then there's another thing that you should take into account. If you're going to refinance, and let's just say you're in a VA loan. Let's say you're in a VA loan. You only get that one VA entitlement. Certain exceptions, but one VA entitlement. So you bought your house. Yay, you're in your house. But if you plan on buying another house and you're going to refinance, you might think conventional. Because once you pay off that VA loan with the conventional, you'll free up your VA entitlement and you'll be able to use it again to buy another primary residence. This is huge because the VA loan is very powerful. Here's the challenge. VA interest rates are way better than conventional interest rates. So if you refinance VA, you'll be lower interest rate payment, interest rate. But you won't be able to use that VA again. So you have to factor those things into your big picture. So is it a good idea to refinance? Sometimes, but it's just math. It's always math. Make sure you get somebody who's going to give you the real math, all the math, not just the piece, not the piece that benefits the loan officer or the bank or the realtor. Make sure they give you all the math and then make the decision.
You ever turn a client away because it just doesn't make sense?
Yes, many times.
And talk them off the fence?
Many times, many times. They're like, hey, I really want to do this. I'm like, hey, this doesn't make sense. It does. I turn people away all the time because it doesn't make sense.
Yep. Ryan was just kidding, man.
Yeah, he was just kidding. He's like, yeah.
I believe him.
Yeah, I believe him too. I believe him too. We're not going to turn you in, Ryan.
Christy,
Okay,
312. But wouldn't you have to report that since you're a loan officer and you have knowledge?
I have knowledge of what? Someone says, my loan officers pay me, and they also levitate. And they turn into Wolverines. Wolverines? No. Wolverines? No.
Werewolves.
Werewolves. That's it. They turn into werewolves.
Michael Jackson Thriller.
Yeah, until I have material knowledge. And even then, only on a file that I'm involved in. If I have involved in a file that I suspect there's something, I do have to report what's called a SAR, Suspicious Activity Report. But I am not a judge, jury, nor executioner. I don't get to make the call. I file an SAR and then I move forward until the bank tells me, don't do this anymore. We've had that happen a few times where we're like, hey, we're working on this pre-qual, we're in escrow. They're like, hey, calling you up, we're just letting you know this escrow is no longer happening. You don't need to ask any questions. Have a nice day. And you get mad because like, wait, I've been working on that for 3 months. And like, oh, wait a minute. Someone's going to jail and it's not me. Okay, thank you, bank. Bye. That happens. It does happen.
Well, don't you call in every person that's going over the speed limit every single day?
Yeah, right. You know what? There was somebody going 78 miles an hour today on a
Say, hey,
75.
Popo,
yeah.
this
Hey,
guy's
Popo,
going
let's do it.
fast.
Yeah, we can't. It's impossible. Cool.
Are builder rates way higher?
They're way more muddy.
Yeah.
Muddy.
Yeah.
Because they'll say, hey, listen, I'll give you a 5.25 rate right now. But what they didn't tell you is they're going to charge you $20,000 to do it. Oh, they'll tell you at the end when you're at the closing table with your family and your kids ready to get their brand new room. And they go, oh, yeah, by the way, you paid for that rate. What do you mean I paid for that rate? It's right there, $20,000. Oh, you could walk away if you want. You know, families are, you're like, okay, thank you, Mr. Builder. Happens.
Yep. I want to start home buying. Do you offer credit fixing issues?
So we do small credit repair. We have an algorithm, a computer program that we plug your credit into, and it'll tell us if you pay this down, you can get 5 more points. But if you have dramatic credit issues, we send you to credit repair. It's a profession. Go on TikTok, you'll see 1,000 people doing it.
Ryan needs a $1 million approval. When are you writing it up for him, dude?
Let's do it tomorrow.
You're going to go shopping, Ryan.
Let's do it.
Chris 312 says office loan officer. Okay.
Office, I don't know what that means.
Good to
Okay.
know.
All right,
Oh,
cool,
I
man.
think he's saying
Appreciate you.
because we're direct lender. I think that's what he's saying.
Oh, okay, cool.
Direct lender, not broker.
All right, cool.
But once again, guys, the
Yeah.
builders, I'm not
Yeah.
going to say don't buy a builder house. I mean, they're beautiful, they're new, they don't have the problems. You do have to put a lot more money into them because you have to put backyards, front yards, all this stuff. And sometimes the HOA forces you to do things a little sooner than others. But just keep your eyes open. We're not saying don't buy new builds at all. I've bought
And
one.
I'm not even saying to go to brokers because builders use
Yeah.
brokers. They use direct lenders. So no one side. So there's two sides of the fence. There's direct lender where you work for a bank, and then there's broker, which means you have a whole bunch of lines and you can send it to any line that makes it work. Neither one of these is on lock. Neither one of them is perfect. They both have ways to kind of screw you over. They both have advantages and disadvantages. So you have to know this stuff. Like, for instance, one of the biggest advantages of direct lenders proprietary loans. We have a proprietary loan, which means the bank is putting their own money in that those brokers can't get. They just can't get it. Doesn't matter what they try, they can't get it. We have something called NAF Cash. And in NAF Cash, NAF, New American Funding, who we work for, will literally step in with the money cash and pay for the house cash and then finance you right after. There's no bank in the world can step in and say, I'm going to use that because it's called a proprietary bank line. That's a direct lender situation. There's some pros and cons to both sides. Neither side has it on lock. What we'd like to do is educate you. I've been on both. I've been on the broker side. I've been on the direct lender side. I can say, I know how to move the numbers around on both sides, but I'd rather do this. I'd rather be able to face you every single day as an honest loan officer making an honest living and know that you're going to use me for the next 10 years and your family's going to use me and everybody's going to use me because I gave you the real numbers.
Dude, where's the application? I'm going to buy a house from you.
Buy right now.
I'm
Dude, I'm signing up right now.
Right now.
I don't even want a house. I'm going to get one.
I'm going to get 2.
I'm going to get 2 houses.
That's a great sales.
Dude, I'm
you're the one for me.
You're the one for me.
Anita and Larry, dang it, you two have strong knowledge. May the Lord continue to bless you and your family.
Thank you, Anita and Larry.
Right back
Appreciate
at
you
you.
very much.
Right
Hard us
back
up.
at you.
Let the algorithm know that we're trying to get you a house. Trying to get you a house in 2024.
You're welcome. We'll answer all your questions. God bless you too.
Yep. Cool. What do we got?
So when it comes to buying a house, man, when it comes to buying a house, I think more people don't know that getting pre-qualified is easy, painless, doesn't cost them anything. What can you do to convince these people to get pre-qualified?
So I can tell you that it doesn't cost you a dime to do this. And we will answer all your questions with all the knowledge, and we'll even give you an autograph. We'll give you an autograph saying, hey, we're badass.
On your
Here we
loan
go.
docs.
On your loan docs. On your loan docs, we'll give you a lot.
Don't sell it.
Yeah.
It's worth billions.
Okay, don't sell it. It's worth billions. I don't want to see it on eBay next day.
You'll find it too.
Yeah, I'll find
I
it
love
too.
that stuff.
I'm all on eBay.
Real Ruby,
Okay.
as opposed to the fake one.
Okay, no
This is the
fake
real one,
rubies.
guys.
Real ruby.
What
Cool.
about VA loan credit scores?
So here's the thing about the VA guidelines. If you're doing a VA loan, first off, it's the VA doesn't give you the money. The bank gives you the money. But the bank gives you the money and the VA says, hey, if this guy defaults, I'll pay. I'll pay. So now that's a very secure position from a bank's perspective. So so the VA doesn't give you the money, the bank does. But the VA guarantees the loan up to 25% of a certain amount. It gets a little complicated, but for the most part, the VA guarantees the loan. And the VA guidelines don't have a credit score. They don't care what your credit score are. It could be 0. It could be no credit. The VA works off something called a residual guideline. Residual means, can you afford to feed your family and live after you have this house? It's a weird guideline. It's got east, west, coast, north, south. And the VA guideline doesn't have a FICO score. So technically you don't need a FICO score. Now, when the lender gets involved, remember the lender's giving you the money, the lender can put their own overlay on it. They can say, hey, 580 FICO, 500 FICO. They can say whatever they want because they have a more restrictive position. But usually, because the VA guarantees the loan, they're going to go, we don't really care about that. We're going to underwrite you different than the rest of the other files because we got the big daddy government on the back that says if you default, I'll cover it for you. So VA, there is no technical FICO score. I've seen some people on TikTok going, hey, I do below 580 FICO scores on VA and most banks don't. I'm like, no, if you read the guidelines actually don't have a requirement for FICO score. The lenders have a requirement for FICO score. So just know that. And VA, make sure you get a good VA loan officer. Make sure you get a good one. Why? I've seen this happen a couple of times in my career. Somebody is service connected, which means something happened to them in the military and the government says you're disabled at 10%. And then they get to waive their VA funding fee. VA funding fee can be very expensive. It can be up to 3.3% of the loan. That's a lot. If you're a $500,000 loan, that's $18,000. But if you're 10% or more, then we can waive the VA funding fee, which means we save you $18,000 just like that. Now, sometimes somebody will submit their original DD-214 and the COE hasn't caught up with it yet. And they don't know, the VA doesn't quite know through the system that you're 10% disabled. So they give you the certificate of eligibility, COE, and you still have to pay the VA funding fee, and the VA loan officer does not know to ask you, are you service connected? If so, at what percent? Because then they can write the paperwork and save you a fortune. I've seen it happen many times where a VA loan officer, they don't know this stuff. You need an experienced VA loan officer. Go ahead.
Yep, I guess. Ryan, yes, give out generous loans, generous pre-approvals. Hey, man, if you're worth it, I'll give you every single dime.
Dude, every dime you're entitled to, not one more though.
User 7923, what do you know about medical health staff loans for homes? I saw it on Facebook.
Ooh, if you saw it on Facebook, it must be true.
Has to be.
Yeah, one of the things that we've learned in many years of finance, I got in finance in 1992.
Dang!
Is that when Facebook
Before
says
cars?
it, it's got to be real. It's got to be real. Facebook doesn't lie ever. Ever.
Did you have shoes back then?
We're on Facebook right now.
But did you have shoes in
Dude,
1992?
Facebook, yeah. Facebook. So medical health staff home loans. Here's what most programs are. They're a sleight of hand marketing. Most of them are some type of sleight of hand marketing. We know because we see it. Our bank does it. And sometimes the bank will say, hey, listen, we're willing to contribute $500. Well, the truth is, if it means getting a deal or losing a deal, we'll find $500 somewhere in that deal. We'll tell, hey, bank, we need you to eat $500 more. So first thing you need to do is get qualified. Then show us the program, and I'll send it up to my management. I'll go like, hey, listen, this program here, ABC loan officer says it exists. Pull it up. Does it really exist? Yeah, cool. Can we find $500 inside of this deal in order to make this person happy? They'll say, Lee, we'll do better than that. We'll find 600. Sometimes it happens that way. Sometimes with interest rates. So if the programs are good, if they're good and they're available to everybody, we can get them. If not, most of the times we can compete with them.
Yep. Ryan, do you see fake pay stubs a lot and turn it in? Have we seen fake pay stubs?
Yes, we have.
I can't remember.
Yeah, and what I'll do is I'll say, hey, I have the responsibility to tell my manager that looks like whiteout. So I'm telling you, and then I don't know what you're going to do with this, but I'm not going to call that guy a liar because that puts me in a whole different game. He has to give me what I do. I turn it into my manager. My manager does whatever, and sometimes the loan will stop. They'll just call us and say, hey, you know that ABC loan you were working on? Just stop.
Yeah, and they take care of it from there.
Yeah, don't ask any questions.
Yeah.
Just stop.
So here's the thing, guys. There's checks and balance systems all over the place, from taxes and the IRS and paycheck stubs and verification of employments. So the bank has already figured this all out. Don't try to play the bank. They're going to figure it out.
Yeah.
If you're trying to hide something, they're going to figure it out.
Dude, this happens child support.
All the time.
All the time. We're like, hey, we're about to get you qualified. We're sending this. And then we pull credit and there is no child support on there. So, okay, cool, fine. We don't think nothing of it. And then we get into escrow and we find out, hey, there's child support there. And how do we find out? They do something called, I think that's on a caver's check or some other.
It's the SI from
statement of information. The statement of information check. There's checks that we're not involved in. And then all of a sudden they'll pull it up and they'll go, hey, this guy owes $60,000 in child support. So I'll get on the phone and I'm like, hey, Mr. Buyer, strange thing happened after we got into escrow. Do you know about this child support issue? And the buyer will go, oh, yeah, I paid a credit repair company to get rid of it. It doesn't exist anymore. And I'm like, no, Mr. Buyer, let me teach you about the system. You paid the credit repair company to challenge them because they couldn't report it anymore. But that doesn't mean it disappeared. You still owe child support. You still owe it. And then, I love this one. Well, my kid's over 18 and F that B. I'm not going to give her anything. How many times do you hear that one? All the time. We're like, F that B. I'm not going to do anything. Not going to do anything. And I'm like, yeah, you're probably not going to get a house because this is one of the ways that the system has to check you. If you have a child, stand up and pay for it. Be there if you can. But if not, just pay for your kid, man. Pay for your kid.
It does affect you buying a house.
Yeah, it'll affect you buying a house. Cool.
Real Ruby again. I only make $2,000 a month with 4 kids, but I have food stamps, no car. Will the VA loan qualify me?
Are you a veteran, Real Ruby? That's the first question. Are you a veteran? If you're not a veteran, which means you served in the armed forces and you got an honorable discharge or even a general discharge, anything
She said, yeah.
with other than honorable conditions. So if you're a veteran, then we need to send you through and figure out if you can.
And thank
and
you
if
for your
not,
service.
yeah, thank you for your service. And if not, then we're going to put together a program to see. Sometimes you need more income. If you can't afford it, they're not going to let you get into a house. Just simple, not going to let you get in.
Dilly Sauce, thank you for your service
Yes.
too. Team Sanchez, what's up, man? How you doing?
What's up, Teen Sanchez?
So Dilly Sauce says, does 100% service disability affect your ability to buy real estate?
So from a VA perspective, so if you're 10% disabled, you get X amount of money a month from the government. Because the government says, hey, something happened while you were in service, and we're going to give you money. Sometimes I had a buddy, Joey Jones, who got both his legs blown off. And he's very big. He's Fox commentator and everything. Both his legs blown off. Every time I think I'm having a bad day, I think about Joey Jones. So anyway, he got both his legs blown off, and the VA said, hey, listen, you're 100% service-connected disabled. Why? Because you got your legs blown off in a war. Dude, much respect. I mean, huge. Hey, this guy has the best attitude in the whole world. Love this guy. Anyway, yes, he gets money, X amount a month, good size, not like forever money, but good enough every month you get some money coming in. So if you're 100% service-connected, 100%, you get to waive the VA funding fee. But if you're 10%, you get to waive the VA funding fee. The only real huge advantage that 100% gives you is some places, some, not all, will give you a break on your property taxes. So in San Bernardino County or in Riverside County, they give you a percentage break on your property taxes if you're 100% service connected. Some places, like the ones in Texas, will waive them entirely. But some places in California will only give you 1% of property taxes. So that's how it affects you. The good news is that the money that you're receiving for service connection, we can gross up 25%. So if you're receiving $1,000, well, now you're saving $1,250 for income purposes. So there's a benefit to being 100% service connected. And there's guys that something happened to them, respect, man. I want to help you no matter what. Even if you're 0, I want to help you. 10%, I want to help you. 100%, I want to help you. I know the VA loan very, very well. Go ahead.
Oh, you too, man. Thank you for your service.
Yep, you're welcome.
How was the Civil War? He was there. Lido San says hello.
What's up, Lido Sam? Good to see you, man.
Team Sanchez sending the roses.
Cool.
Ryan, I'm 100% P&T. Is Kelly 100% tax exempt?
No, Cali is not. And the individual counties get to decide in California. So in Riverside and San Bernardino County, they will give you certain exemptions, but not 100%. And it's a process, and they don't give it up easy. You got to fight.
Real Ruby, where I'm located, houses are really low. It's just my credit that I keep getting denied. 510.
Real Ruby, if you have 510, you got to fix that credit score. You got to fix that credit score. The reason is, even though the VA has a guideline that says we don't care what your credit score is, they do care how you pay your bills. And the way you get to a 510 is you didn't pay somebody a lot. So if you didn't pay them a lot, it shows up in your history. And although the FICO score is not the determining factor, how you pay your debts is. And they do want to know that you are going to pay your bills. It's not unreasonable. Because remember, the VA guarantees it. The bank gives you the money.
Yeah. And I'm going to say, call us. Let's talk about it.
Yep.
I never, just because you've been denied by someone else,
Yep.
a lot of our clients have, and we're able to get them into houses, and that's not a guarantee,
Yeah.
but we'll give it hell. Time for commercial.
Okay, if you need a badass loan, call a badass loan officer. You can call a badass loan officer by screenshotting the number on the screen right now. Screenshotting like that. Like, okay, cool. And then calling after the live. Don't call us now. I've had people get mad because they call me while I'm live. Guess what? I'm live. Can't do it. Can't do it. Can't do it.
Can't do it. Won't do it.
Okay.
Ryan, you know if San Diego's 100% tax exempt?
I think San Diego might be not so much because the property values are so much. Bear in mind that the city, the counties, they want their money. The government wants their money. They don't do this happily, especially in California. I hate to say that, but in California, they're not as friendly to veterans as, say, Texas is. And the reason I know that is my primary residence is in Texas. I go to Texas, and I know the benefits I get in Texas. For a long time, my primary residence is in California. I know the benefits I get in California. California is not as friendly to veterans as some other states are. So, yeah.
Aurora Soto coming from the Bay Area. Do you help in the Bay Area?
Help in the Bay Area, man.
Yeah.
Everywhere except New York.
Did the Niners win? I think the Niners won, right?
Okay.
Go Bay. Who needs credit if you pay cash?
Amen.
No one.
Yeah, dude. Yeah, pay cash.
I don't think Pablo
Yeah,
Escobar had a credit score.
$500,000, just drop it. Yeah, $500,000, just drop it right
Pablo
there.
Escobar owned a lot of houses, I think.
You're right. Yup.
Because this will be my second house with the VA loan. I sold the first one debt-free.
Perfect. Real Ruby. What happens is once you sell it, the escrow company sends the VA the payoff, and then they restore your eligibility. It's a thing that we go through. You don't have to know it. I'll help you. But they restore your eligibility, and you're able to use it again. You can use it 100 times as long as it's been restored. Here's a catch. If you didn't pay it off in full, in other words, they foreclosed on you, then you don't have that eligibility again. There's something called a two-tier ratio, which maybe I can get it restored. But the only options at that point are to pay them back and then get it restored. You don't want to mess up that VA entitlement. It can really help you. You can buy a $5 million house with a VA loan.
Paid in full, said Ruby.
Yep, paid in full. You're in a good spot, Ruby. That's a good spot.
Aurora Soto said, hell yeah, the
Hell
49ers won.
Wait, what?
They beat Green Bay.
What?
Green Bay.
What?
Green Bay. But here's the truth. Green Bay had like their backups in. They didn't have all their
They had mall
starters
security in.
right? Well, that's what I heard. I don't know. Mall security was in, maybe.
Yeah. Why would you do that in the playoffs?
I think they had to. But they freaking put up a good game.
Did they?
Niners still came on top.
Yeah.
But 49ers, I heard. I didn't see the game. I heard they put up a really good game. Tell us about it, Aurora. Tell us how that game went, and we'll cover that right here. So when it comes to buying a house, you got to get pre-qualified to buy a house, guys. You have to turn in 2 paycheck stubs, 2 W-2s, what else? 2 bank statements. And that's basically it. With that data, we're able to get you a pre-qualification, see where you stand. It's an easy process, guys. How long does it take for you to do an application over the phone?
Application over the phone, if you don't ask questions, 3 minutes. I can do it 3 minutes, in 3 minutes. So, and with that, I'm going to go really fast. What's your full legal name? What's your address, date of birth, social security number? Who do you bank with? Who do you work for? And you'll answer all those questions really fast. I've timed it. I can do it in 3 minutes. Most of them take about 12 minutes because you're going to ask questions.
And if you don't want to talk to us, I'll give you 2 routes.
Yep.
I'll give you 2 routes.
2 of them.
If you're on TikTok, go to the link in the bio, fill out application.
Instagram too.
If Instagram too,
Yep.
he's right. If you're on Instagram, go over here.
Yep.
Go to the link in the bio, fill out the application. If the other version is just text us, and all you have to say, TikTok, text app. We'll text you the app.
Yeah, you can do everything over the phone. For some reason, the millennials or zillennials or whatever you call them these days, they don't want to talk. They're like, hey, can I just fill this out online? Yeah, I'm sure. Here's a link. Do it. Fill it all up. They'll upload the documents. Many a time I've sitting there and gone, oh, you got me all the docs? Oh, everything's here. Cool, let's do it. But text me after you're done. Upload it all docs. Because sometimes it goes in my software and I don't know it's there for 2 or 3 days.
Interest rates are getting better. The environment's getting more populated with buyers. The competition is going to start kicking in. In some areas, I'm hearing that the bidding wars are already going on, guys. So if you want to buy a house, if you're a first-time home buyer, you need to get in now.
Yeah.
The repeat buyers have the cash, but the first-time home buyers a little harder. You need to get in now.
Dream
guys.
for All program.
Tell them about that.
Oh, dude, I've seen some loan officers coming out with this. And here's the Dream for All program. You're going to love this, okay? So, have you ever seen a good mafia movie? Name a good mafia movie.
Goodfellas.
Goodfellas, great one. Give me another good mafia movie.
Scarface.
Scarface. Okay, cool. So, if you've seen this, Godfather's the mega.
I didn't even name that one.
Dude, yeah, I know. How did you not name that?
That's my favorite.
So anyway, so you got a Dream for All program, and the loan officers are going, hey, this is the greatest thing ever. Yay, yay. Well, as a loan officer who actually understands this, let me tell you what it looks like through my eyes, okay? All right, cool. You go to the mob, and you're like, hey, I want to open a restaurant. I need some money. And the mob goes, hey, we're here for you. We're your Uncle Cali. We're your Uncle Cali. Yeah. How much you need? Yeah, you. So you're gonna open that restaurant or buy the house. Yeah, 500,000. Okay, cool. How much you need? We'll give you 100 grand. Yeah, your Uncle Cali's here for you. We're gonna give you 100 grand. We'll give you 100 grand. Good for you. 100 grand. 100 grand. Okay, good news. Hey, guess what? We're in business together now. And you're like, wait. What do you mean we're in business together? Oh, don't worry about it. We're in business together. Yeah. That 100 grand makes us in business together. Dream for All program, Uncle Cali here. We're in business together. 100 grand. By the way, that 100 grand that you have, yeah, I told you I get it to you. Yeah, I need interest on it. Yeah, I need interest. No. You heard that right. I need interest. I'm buying a house for 100 grand. I need interest on that 100 grand. Okay, cool. Yeah. Oh, by the way, that house is going to appreciate in value. I want my share. No, in addition to the interest. No, the interest doesn't cover that. No. I want my share of the appreciation. Yes. Wait, what? No. We're in business together. Don't worry about it. Yeah, forget about it. I got to get that down.
Yeah, dude.
Forget about it.
You get haters.
So, I want my 100 grand back. I want it with interest. And I want the appreciation. Yeah. Oh, one more thing. I need you to know. Your Uncle Cali's here to help you. Yeah, I want you to know one more thing. Yeah. In the event that we both can't get out whole, I get out whole first. Yeah, me. I get out. I get all my money first. I get all my interest first. And I get all my appreciation first. If you happen to make a little money on the process, God bless you. Yeah, I hope you do. And by the way, you can't get rid of me. No. Blood in, blood out.
Yay!
Uncle Cali is here for you. So, as the loan officers are running around going, hey, the Dream for All program is going to give you 100 grand. I'm like, yeah, kind of like the mafia would give you 100 grand. Yeah, you think it comes without strings? You're crazy. That's not the way California works.
So
anyway,
the infamous words
Yeah.
of Henry Hill from the movie Goodfellas.
Okay.
F you pay me.
Damn.
California. Oh, actually, you can take Uncle Cali and
Uh-huh.
exchange the name for Gavin Newsom.
Oh, Uncle. No, I like Uncle Kelly. Uncle
is
Kelly
Uncle
works.
Kelly,
Yeah,
bro.
Uncle.
He
Yeah,
is
he
Uncle
is.
Kelly.
He's Uncle Kelly. But if you go to TikTok, you're gonna see all these loan officers going, "Hey, the Dream for All program. You wouldn't believe it. You gotta
It's
hurry up.
amazing!
You gotta hurry up and get in it. You gotta hurry. You don't
I
understand.
didn't tell you about the lottery.
It's a lottery. You gotta hurry up. It's crazy. It's crazy.
You guys work with Georgia?
No.
Remember Georgia?
Oh, we love Georgia.
I love Georgia.
Yes, we do. We work in Georgia. We work every state except New York. Uncle Cali doesn't work in Georgia, though.
works in Cali.
Uncle Georgia only works in Cali. But they got Uncle Florida?
really know.
Yeah, Florida. I don't know how to do that one, yeah. So anyway, Florida has a version of this.
Georgia.
But, yes, we do work in Georgia. Yes, absolutely. And when remember when the loan officers are touting, hey, listen, this is a wonderful, amazing program. I want you to hear, I make a commission in the background. I make a commission. When we do this live show, we make a commission. I'm telling you, not from the live show, but when we fund a loan,
I'm not
we
getting paid for
make
this?
a commission. Wait, what? I gotta go talk to my agent.
All this time.
Yeah, this is bullshit. So we do want to do your loans. We do make a commission. We disclose the commission. But here's the angle that we take. We want to be your loan officer for life. You'll actually hear me say that to you on the phone. I want to be your loan officer for life because I know this isn't going to be your last house. Probably. You're probably going to buy another one. You're probably going to move up, move down. You have a cousin, sister, aunt, uncle. And if I treat you right and I give you the right numbers, you're going to keep working with us. The reason we've been in business, even through this downfall, is because we do it correctly. Do we make a commission? Yes, we do. And I want you to think about that every time when we tell you to go buy a house, because we're making a commission. When I tell you to refinance, because we make a commission. But I'm also going to give you all the real numbers. And then inside of that, I'm going to tell you, I make a commission. So when you listen to those guys on TikTok, those loan officers saying, hey, greatest, you better hurry up and get your application in. Think in the back, they make a commission. I'm telling you right now, we make a commission when we close the loan, not for this.
Yeah. Okay, one last question, then we got to split,
Yeah,
guys.
cool.
Soto, does checking your credit lower FICO score? I'm going to answer this.
Go.
If your credit's going down, it's going to be lower. If your credit's going up, it's going to be higher. Peace out, guys.
We've been Chris and Lee. We appreciate you. We'll be back.